In this lesson, I will show you what is Volatility 75, 1 second index Pip calculator, so you can see how to calculate the value of a stop loss, of a take profit, or 1 pip with this Pip calculator. The Pip calculator link you will find below in the description, and also you will find other links that will be helpful, like this PDF with a table with all volatility and also other synthetic indices from derivative broker, where you can see a contract size, minimum volume, maximum volume, and also a pip value for each of these synthetic indices. I will put this one below here so we can see all the details. So Volatility 75 1 second index is also here on the chart on the right side inside the MetaTrader 5 trading platform. I will show you a few trading examples and how to use the Pip calculator to help you define the value of a pip and also stop loss and take profit before you open an order, so you can properly see and calculate the risk management. Okay, so the Pip calculator has several variables and also the fields that are needed. On the top you have a pip value that defines how much of US dollars is valued the pip or any other value, for example stop loss or take profit. When you click calculate, you get the value here. Below that you have a symbol which is Volatility 75 1 second index currently selected, but you have a drop down menu to select any other synthetic indices that you would like to use. When you click on one of them, it will automatically populate the contract size and also the point value, which is defined by the derivative broker. If you have any other broker and they have defined something differently for these variables, you can simply change these values by entering them. Then you have the volume, which is also a lot size. I have put here a 1, which is a 1 standard lot. Below that you have a contract size, which is defined as a 1 for the Volatility 75 1 second index. It is a value that is needed in calculating the pip value. And then you have a point value, which is defined as 0.01. 0.01 represents a 1 pip on the chart for the price. For example, we have here currently a price 7,000.37. So we have also 2 decimal points, and that means when the price change by 0.01, that will mean that the price has changed by 1 pip. So when you enter here point value 0.01, click calculate, you get the value of a 1 pip. So on the Volatility 75 1 second index for the derivative broker, we have a value for a pip 0.01. Remember that you are calculating with a volume which is 1 standard lot, and that means this is the value that you need always to use if you are calculating the value for a 1 pip. If you change this value, you will affect also the pip value, because here is the formula. Here inside the PDF presentation you have here a pip value formula, which is equal to point value multiplied with the volume multiplied with the contract, where the volume is always 1, which means 1 standard lot. And then you have a contract, which is also defined here. You can see most of the time it is number 1, and for the Volatility 75 1 second index is defined as a 1. And the point value is here, which is defined as a 0.01. So when you multiply these 3 values, you get that the pip value is equal to $0.01 for the Volatility 75 1 second index. Let's continue, just a minute. So here inside the Pip calculator, you can define also the entry price, stop loss, and the take profit. And this is 3 values that you can define by your order before you open the order or after you open the order. This is great if you want to see how much of the stop loss and the take profit will be valued before opening an order. So you can also modify the volume to affect the price. And below that you have a stop loss difference and the take profit difference. Stop loss is difference between the entry price and the stop loss, and the take profit is difference between the entry price and the take profit. So when you have these 2 values, you can simply copy them here in the point value, click calculate, and you will get the value in US dollars. Let me show you that on examples. For example, let's see that you want to open an order at this price and you would like to set stop loss just below these candles, and you're expecting that the price will go up and it will reach this area, which is slightly here above these candles high. So to calculate how much the stop loss would be equal and also take profit at these trading levels, you simply copy these levels here inside these three fields. So for the entry price, it would be here 7026.82. Then the stop loss would be just below 6972.19, and the take profit would be 7150.64. Click calculate. You get the value for the stop loss 54.63. That is the price difference on the chart. But when you copy this value here inside the point value, you will calculate how much that would be in the US dollars. And that means with the volume 1 and the contract size is 1. The same is for the take profit. When you copy this value here, you get $123.82. So if you open an order here inside the trading platform, set the volume number 1 because it is one standard lot, stop loss, copy paste here, and the take profit, copy paste here. So we are expecting that the prices will go up, so this means that we need to open a buy order. Here it is, the order is open. Now we can remove these horizontal lines to see the stop loss and the take profit level. Have in mind that we have currently here a different entry price, so we need to put that value here, 0.05.30, and click calculate. Now you can see that the stop loss difference between the entry price and the stop loss is 33.11. So when we copy this here and click calculate, we get that this would be equal to 33.11 US dollars. When you go here on the chart, simply put here your mouse or hover it, and you will see that we have the same value here. And it's also the same for the take profit, 145.34. When you copy this one here, it will be the same value. So you can see that the Pip calculator for the Volatility 75 1-second index can help you to define the stop loss and take profit level in US dollars before opening an order. Let's close this one and open another one, but let's, for example, change the volume. So when you're changing the volume, you are affecting on the price, and you will see how that, but you need to know what is the minimum and also what is the maximum lot size for the Volatility 75 index with your broker. When you go here in the table, which is a dairy broker, you will see that the minimum volume is 0.005 and the maximum volume size is 5. So we can put a volume from 0.005 up to 5. Let's make that happen. Put this one here so we can see it. So for example, let's change the value to 0.003, for example. And let's put here a new order. I will open now sell order with the new values. For example, I would like to open an order at the current price, and the stop loss would be just above these highs. And I'm expecting that the price will drop down up to here, where we have these lows and also the wicks. So when we enter these three values, let's put them here, 7025.91. The stop loss would be 7135.16 and the take profit would be 6844.72. Click calculate. Now you can see that the stop loss is 109.25 in price difference, so we can copy this one here and click calculate. Now you can see that this stop loss would be equal to 3.28. For the take profit, let's copy paste this one, would be 5.44. If you are satisfied with this, then we can open a new order, which is a sell order, but we change the volume here, 0.03. Let's copy paste a stop loss and copy paste take profit and click sell, because we are expecting that the price will go down. Sell. Okay, now let's remove these horizontal lines and let's see what is the entry price. We need to put the correct value here, 7028.27. Click calculate. we get a new stop loss level, copy paste this one here, and we have $3.21. Now let's see, is it the same value for the stop loss? 3.21, and the take profit would be 551. Let's copy this one here, 551. Now you can see before opening order we could know how much the stop loss and the take profit would be, so we can prepare before opening order, is that acceptable to us or not, and if not, you can simply change the volume. The contract size stays the same all the time. Now you can see that the Pip Calculator for the Volatility 75 1 second index is a great tool that you can use to calculate the proper risk management before opening an order. Just have in mind that these values should be controlled, and that means the volume should be controlled. That will affect the price, and also the contract size stays always the same, which is defined by the broker for this symbol. If you have any questions regarding this video lesson or Volatility 75 1 second index, please leave a comment in the description and I will try to make a new video lesson to explain to you your answers. And also, if you like the video, click the like button and subscribe. See you next time and happy trading!